Welcome to the Deep Dive. Today, we're jumping right into the very latest global news. It's July 14th, 2025. We've got a top 10 global news summary here from just the last 12 hours or so. Lots of crucial stuff. And our mission really is to unpack what's actually moving the markets, what's shaping those geopolitical talks right now, and, what it might mean for you.
Absolutely. And what's striking is how immediate this all feels. This summary, it captures the instant reactions, the strategic shifts happening almost in real time across big economic sectors.
Yeah, real time is right. So let's kick things off with, the elephant in the room.
Yeah.
Those U.S. tariff threats. Our sources are really emphasizing that these threats, especially coming from Trump, might not just be about, pure trade policy.
Right. Analysts seem to think it's maybe as much about dominating the media cycle, keeping his name out there, as it is about the specifics of the policy itself.
Keeps everyone guessing, doesn't it? And businesses have to react not just to potential rules, but also to, speculation. And that August 4 deadline is just hanging over everything.
It really is. And if you look at the immediate picture, the impact is pretty clear. Global equity markets are down. U.S. futures dipped about, 0.3%. And European indexes are definitely feeling it more.
Though, didn't the UK's FTSE 100 hold up relatively well?
It did, interestingly. Notable resilience there amidst the broader dip. But elsewhere, the reaction is significant. We're already seeing the EU and South Korea in serious talks, trying to figure out how to cushion the blow if these tariffs do hit hard.
Trying to get ahead of it.
Exactly. And you've got Germany and Italy being quite vocal, warning about, serious damage to their exports if they don't get some kind of early agreement.
So with all this uncertainty, this pressure, are we seeing that classic flight to safety? Like what's happening with gold?
Oh, definitely. That anxiety is fueling a real scramble for safe havens. Gold just touched a 3-week high, around $3,367 an ounce. Yeah, and it feels like more than just the usual safe haven move. It hints at maybe a deeper worry, perhaps about geopolitical stability, maybe even long-term dollar weakness, not just the immediate tariff issue.
Okay, and how's this playing out elsewhere? What about a major player like China? How are they reacting economically?
Well, you can see the anxiety reflected very clearly in China's numbers for June. Their exports and imports, they both jumped significantly, like really accelerated.
By the jump.
It looks like businesses were basically rushing almost frantically to get orders shipped and received before that fragile trade truce potentially breaks down ahead of the August deadline. It's a very proactive, maybe even a bit desperate response to try and get ahead of potential friction.
Right, makes sense. But it's not just tariffs moving the needle, is it? We're seeing action in other areas too. Oil, for instance. Brent and WTI crude are up, reaching 3-week peaks.
That's right. That seems to be driven by a couple of things hitting at once. Investors are worried about potential U.S. sanctions on Russia. That's one factor. And then you combine that with the strong Chinese import data we just talked about, suggesting, underlying demand is still there.
Okay, and speaking of really eye-catching moves, Bitcoin. It just smashed through the $120,000 barrier, even hit $123,000 briefly. That's quite a jump.
It is. And what's interesting there, it seems less like pure retail speculation this time. The drivers appear to be more about growing institutional optimism around crypto. Plus, there's anticipation of upcoming policy clarity, actual legislation in the U.S. that could be giving it a sense of, legitimacy in the mainstream financial world.
Interesting. And zooming out a bit, we've also seen the dollar slide quite a bit this year. Does that tell us anything bigger about where money is flowing?
It could, yeah. That slide, it's partly linked to U.S. investors actually putting more money overseas, looking for opportunities elsewhere. And that, in turn, could be fueling some of the outperformance we're seeing in certain global markets.
So capital flight, in a way.
Yeah.
Or just diversification.
Maybe more diversification and opportunity seeking. And it's not just individual investors. We're seeing the big players, the global sovereign wealth funds adjusting too. They seem to be shifting slightly towards more active fund management, maybe less passive index tracking, and notably stepping up investments in China. Despite the tensions, they're clearly bracing for more volatility.
But the dollar still reigns supreme, fundamentally.
For now, yes. Despite these shifts in the recent slide, the U.S. dollar absolutely remains the world's dominant reserve currency. That hasn't changed fundamentally yet.
So putting it all together, it's this really dynamic picture, isn't it?
Yeah.
You've got Tariff threats causing jitters, geopolitical tensions simmering, investment strategies shifting, creating both a lot of uncertainty but also some surprising pockets of opportunity.
It's incredibly complex, yeah, constantly shifting. And considering how fast things change, often driven just by headlines, perhaps the key question for you, our listener, is this. Given all this volatility, these rapid, sometimes unpredictable shifts, what are the really critical questions individuals and businesses need to ask themselves right now about how to actually navigate it all? How do you future-proof your strategy in this kind of environment?